Good day, traders. I trust you are all doing well, and welcome to this production. I'm going to be looking at Aussie USD versus yen. This is Monday, this past Monday, 23rd of June. Now, as I've said to you guys, whenever I come into the day, because I am trading intraday during the day, the one thing that I'm interested in, or really the most important thing I'm interested in when I look to the left, previous day, is high of yesterday, low of yesterday. So these were the highs of Friday, the 20th of June, high, low. That's about it. Even if I'm with in Asia with my clients, it's all I'm interested in when I get to the morning. Now, this is low of yesterday. As you can see, we gapped down. Now, we got to be trying to find opportunities, right, based on the strategies that I have taught you. Nothing much for us to do right from the open, right? But when you get to the test of the low of yesterday, remember you always just asking yourself, what can I see in front of me? Market tried 3 times, 1, 2, 3. That's a wedge test of the low of yesterday. Then you get this candle breaking out beneath the low. That's a pretty good trade to take. So I would have taken that as a first trade of the day. Let's just put our entry signal, the red triangle beneath it. That's a beautiful trade to have taken. And as I've said to you, you always have options where to put your stop, right? Depending on the type of trader you are. Tighter stop you could put is here, or you could do a measured move of that candle, a little bit more conservative. And of course, if you have a more conservative stop, the market goes your way, you make less profit than the more aggressive guy. But that's a good place to put your stop in. If you didn't take that trade and the market is unfolding before you, and you see this pullback, I mean, the bears went exceedingly strong there, but this is enough of a pullback. The problem is it is a doji. Had this candle closed near its low like this one, I would have been keen to take that. But if you want to take the trade, again, it's always where you put your stop, right? Stop can be above here. And why would you be thinking of taking that trade? Well, you'd be thinking of taking it, saying you've come off the wedge. 3 push pattern, pretty strong pattern, as I always say. That I'm always looking for that all day. You can use a measured move stop of that. Put your stop there, which is almost as tight as above the high of the session. And then we spoke about trade management. As the trade is going, you manage your trade, trail your stop. Now, as the market is moving, that low is the low of today. All right. So when you get that, you always got to decide, if you're going to be in the market, if you're trading the day, like I do, you want to see what happens there. Instead of just setting your take profit at that level, you might get a little bit more, which you did. If you wanted to take profit at a level of support, or you take your profit and the market gets down there. But this is a pretty strong bear breakout. When we are here, we're going into the low, so you probably don't want to do much. But when you see that, bear strong there, you might want to take another trade there, which is perfectly fine. Again, goes back to, where do I put my stop? Yeah, reading my mind at this stage, which is fantastic. You can take that, or you can even take that. And the key is where you put your stop. And your stop, I would put it at the top of the breakout. There's no point putting a stop in the middle of nowhere. Chances are you can just easily get stopped out. So you put your stop in the correct place. Manage your trade, probably you would be getting out in there at some point. Then we have tight trading range. I mean, all of this is unfolding in front of you real time, right? And there are no signals that could have lured you into the market there. So best would have been to wait. When you see the breakout above the trading range, good enough to attempt to take that. There is the low of the day. That's the best place to put your stop. If you look to that breakout pattern, use that. Measure move stop is down here. If you looked at, I'm just looking at the measured move of the candle. There is a measured move. Look to the left. That's a key low. That's the only place you can put the stop. Just like we had the breakout pullback, And we said you could take that trade. We should have marked it for you traders. Let's mark it. You could take that trade. That's perfectly fine. You could do the same thing here. There's a breakout. There's a pullback. So you take that first trade. Remember, you don't take both trades because then you're just increasing your risk, right? And they are within the vicinity of each other. So there is no point in doing that. So that's taking that trade, stop here, get another, entry breakout pullback. There is a high one, first entry after the breakout. Now, when you consider this particular entry and this, they're in the same vicinity. Stop is the same stop, so there's no point doubling up on your trade. If you didn't take that, you take that. If you've taken that, you don't take that. There's no point in doing that. You manage your trade, and the bears fail to go any further, so you'll be getting out somewhere beneath here. Then we have a beautiful enough bear breakout. I mean, that's even more convincing in terms of bear strength than what we had in this zone here. So you definitely want to be selling that. And your stop, as you can guess, it's at that high. And if you want to check the relevance of that stop, the validity of it, measured move of that breakout candle is there. So you look to the left, that's where I'll be putting the stop. I wouldn't put anywhere tighter. No point in doing that. Then you have a follow through. You come into the low of the day. Probably don't want to take that. That's the low of the day. The moment you get a follow through, if you want to take that, your stop is still going to be up here because you don't know how far it's going to go, right? You don't know all of this is going to happen. So you got to take a trade and manage it. Stop is still above here. Get a tight trading range. There we had the horizontal tight trading range. Bears failing to break through. Here we have another tight trading range. We don't know if bears are going to fail to break through or not, but they failed to break through. We have that candle, almost similar to that. You see that? That was horizontal. That's a bit angled. So you could take that, put your stop down here. Remember, the first trade that you take in is a little bit more aggressive. So you got to be the kind of trader who is willing to get stopped out more often because, if you take the early breakout trade, chances are you get stopped out, but most breakouts fail, right? There's a new low of the day. So if it fails, you can be prepared to go again. Now, that breakout, the follow through was pretty weak, but bull breakout. Now we have a bit of a high low, dodgy outweight a little bit. There's another bull candle. You can take that. You don't have to waste a lot of energy quibbling, within yourself. If you want to take it, you take it. But guess where the stop goes? Stop is still here, right? There's no tighter place to put the stop. Stop is still here. If you want to take that, there's another candle that you can take. Now you can see the bulls are a lot more convincing. A lot more bulls are coming on board. You can take that particular trade. Oh my goodness, they're all not of the same beautiful shape. But that's fine. I'm not on PowerPoint. I'm just directly on MT4. You could take that. You can take that if you still want to. Now, if you take these two, stop is still down here. If you take that, I'm always very quick just to double check where my stop should be. It's almost the same stop, right? There's no point putting a tight stop, guys. You could put it here, higher, low. That's fine. A little bit more aggressive. You can do that. If you take that trade, then you can use a stop, and that is here. So options, where to put a stop. You don't know what's going to happen, so you got to be willing to manage your trades. If we knew what was going to be happening, well, there'd be no market, right? Because everyone can just see what is going to happen. All right, so we get to that. Bulls were strong enough. Hope for a little bit more. The bulls failed. They were the tight trading range, another little tight trading range up here. We don't know whether the bulls are going to accelerate up. I mean, if you're a bull, what are you hoping for at this stage? You are hoping, of course, that you accelerate up, get back into previous day's range, and just keep going. Bulls failed, here. So that's like a lower high. That's a lower high. Failed breakout above that. That's a beautiful enough bear candle. You could sell beneath that. It just depends. If you're selling live at the market, you might be selling pretty quick as soon as it starts to collapse. So you saw that, and as soon as that happens, like, oh man, that's so disappointing. There is nothing wrong you did. That is perfectly fine. The emotions are perfectly fine. You manage your trade, tighten your stop to here, hold your stop there, get out, do whatever. Your stop at this stage is up here. That's where I'd put my stop. If you want to be a little bit more aggressive, stay, but you got a key level just here. So put your stop here, and manage it. Get out a little bit of a loss. That is perfectly fine. You may not have been fast enough to do anything, but if you're able to get out, good. But if not, take a little loss. That's perfectly fine. Now you're just going to have to wait. You don't know if that's going to happen. You've got this level, you've got that level. You just wait, into the late US session. If you are scalping, or maybe necessarily not scalping, you want to take the chance and say, well, we are into the end of the US session, getting to the end of it. Bulls might be strong enough to try and take. I wouldn't take this trade, but if you decide to take it, you're going to be thinking about where to put your stop, right? Because you kind of say, well, bears failed out of that beautiful thin. Bulls were strong enough. There's a beautiful bear bull candle. Now I get that. Let's see if I can get a little bit more. Well, if you're doing that, guess what? Measured move stop is here. So you can put your stop here. That is perfectly fine. Don't put your stop here at the bottom of this. You can't ignore that, right? You can put your stop here or put your stop here. And then as you go up, you make a bit of money as you go to the end of the day. So, I'm just showing you entries based on the strategies that I teach you in the course. I hope you enjoyed that. I removed exponential moving averages just to keep our decision making clear. They enhance your decision making process. So absolutely nothing wrong with that. Okie dokie traders, name is Dr. George Nyabadza. I shall catch up with you again next week. Take care and have a fantastic time. Bye-bye.